Looking forward to spending some time with you as we get a chance to look at Nutrien, a company out of Canada in the agricultural space. Looking forward to spending some time with you. Let's go ahead and make sure all the tools are working as we get going today. So as Stephen described, make sure your chat box is open. Make sure it's set to everyone so we can communicate. If you want a private message, one of us, just go ahead and go to the host or panelist section. But for most of our communication, make sure it's set to everyone. And here's what I want you to do. Just put where are you calling in from. Could be a city, could be a state, could be a country. Where are you calling in from? Let's put in that chat box. Make sure that chat box is working for us. My team and I are just south of Salt Lake City, Utah. We're right at the foot of Mount Timpanogos, which is known for the north side of that mountain, which is Sundance Ski Resort. Have you ever heard of the Sundance Film Festival? Although I heard somewhere that they might be moving the location or something. But anyways, that's where it kind of all started. The independent film program that happens usually, January, February timeframe. But that's where we're located, just south of Salt Lake City, Utah. We're excited. We had a chance to actually host the Winter Olympics in 2002. Just recently, we found out we got it again in 2034. So we're excited to have that. Come out to Salt Lake, and we'll show you some ski resorts here. Looks like we're all good here. Everybody's chat box seems to be working. Well, let's go ahead and jump in. Another tool I'm going to use today is our poll. So let me just open a poll here. So my question, let me my mouse is getting carried away here. So let's go ahead and start here. My first question is this. Have you had a chance to participate in this webinar? How to listen to an earnings call webinar. Should be open there. Yes, you've had the chance to, yes, this is my first time I've attended. No, I've attended a webinar earlier this year, or it's been last year. Time frame. Now, folks, what are these calls? Well, here at Acumen Learning, we focus on the topic of business and financial acumen. We really believe that senior leaders are doing everything they can to drive greater profitability and cash flow within their organization. That being said, who really impacts the day-to-day activity? Who really drives towards profitability and cash flow for the organization? It's you, it's your colleagues, it's your peers, it's your direct reports. What we find is employees are functionally brilliant, very good at what you do. That being said, we kind of go through our careers with blinders on. If I'm in marketing, I'm very focused on the marketing aspects of the business. Operations, very focused on an operation perspective. What these earnings calls are is a chance to step back, get the big picture perspective. What is it our executives are focused on, or the customer I might be selling into, or a company I'm just interested in learning more about? Being able to step back at the big picture of what's going on, and then based upon what you learn, how can you within your role go back and execute around strategy? So that's what we do. We help employees understand how their companies make money, how decisions are made around the money-making process, but most importantly, what can they do? What can you do to really drive those results? So these earnings calls are a hidden gem. I think there was a stat one time, I think it was a Harvard stat that said only about 25% of employees listen to their company's earnings calls. So what we do as part of our program, this is a follow-on experience for our graduates. Now, don't worry, if you're not a graduate, it's okay. It's open to anybody. We don't care if you've been through our program or not. We're going to give you a tool, a simple framework, and 2 tools that will help you assess an earnings call, with the idea of once you can get comfortable with assessing the company's earnings calls, it's going to help you within your career if it's your company. If you're selling into a customer that's publicly traded, you really become that trusted partner. Not only are you just providing features, advantages, and benefits, but you're literally driving their goals, their objective, their strategies. So being able to engage around these calls, we do them once a month. And every month we do a different company. This is Nutrien. You may or may not be familiar with Nutrien. They're a $26 billion in the agriculture space, providing fertilizers and other resources within the agricultural space. So big company doing a lot of good here. So it looks like about 52% of us, hey, it's your first time. Well, welcome. Good to have you here. And then we got some of our old timers. Thank you for continuing joining. As you engage around these, my absolute promise to you, as you engage with this type of experience, using the tools I'm going to give you today, it absolutely will set you apart within your organization. You'll feel more comfortable as you're listening to your executives talk about financial information, with the idea of taking that information and do something with it. So with that in mind, let me go ahead. Looks like the chat box, or excuse me, our poll is working. So you're coming to a program on how to listen to an earnings call. So my next poll is this. When was the last time you listened to an earnings call? You're coming to our program on how to listen to an earnings call. Well, when's the last time you listened to it? You know what, Brent? It was this year. We just we just wrapped up the year end. If your fiscal year ended at December 31st, all those calls kind of ended throughout end of February, maybe a little bit into March, but most of them were done by the end of February. We're actually getting ready for Q1 earnings calls, which will start happen about 2 to 3 weeks into April, where you'll start to hear those calls happening. And then they will actually go from April until about end of May is where you'll hear these calls. So it looks like, let's see how we did here. Open the poll or share the results. Let's share them here. So about 40% of it's this year. Excellent. Last year, it's been a while. At least one of you said, hey, I'd rather go to the dentist. Well, my hope today is to inspire you enough to say, you know what? I can do this. I can build my understanding of our company through listening to these earnings calls. We're going to give you a simple framework and 2 simple tools. Whether you've been through our program and have that deep dive on these tools, or it's your first time, my promise is as you use it, it absolutely will build your confidence within the discussions around strategy and financial performance. Well, as you think about these earnings calls, they happen on a quarterly basis for most companies. Where are some interesting stats? About 95% of employees don't understand company strategy. Now, folks, I'm not saying that's at your company, but imagine that. If truly 95% of a company don't understand their key strategies. Here's another stat. 90% of employees don't understand their company's important business metrics. Well, folks, if that's true, how do I get better at this? Well, it's really about being able to engage around these calls. So imagine you're the CEO of Nutrien, a $26 billion company. It's the largest upstream fertilizer producing globally. Over 50 countries served by products and services. Founded in 2018. Now, actually, it's been around longer than that, but the company Nutrien came together in 2018. It's the merger of Agrium and Potash Corp coming together. They have about 25,000 plus global employee workforce, about 26 billion in revenue, as I said, about 52 billion in assets. This is not a small company. Upstream organization generating potash, which is potassium, nitrogen, phosphate, obviously goes into the ground to help grow our good products and goods, right? Anyways, very well known within their industry. They're from a little town in Canada called Saskatoon, Saskatchewan. Now, the reason I'm bringing this up is I actually spent some time there. My wife is from Calgary, Alberta, Canada. It's known as the City of Bridges. In fact, another term that I think they call it Paris and the Prairie. So it's very similar to Paris. You got a big river coming right through town and all these bridges going across. Very beautiful area. Anybody from Saskatoon who've been to Saskatoon? Beautiful place. Love that area of the country. So here you are, $26 billion global producer of upstream resources in the agricultural space. You realize that 95% of employees potentially don't understand strategy. And I haven't worked with them directly. My assumptions is their numbers are better than that. But there's a significant portion based upon this Harvard Business Study, 95% of employees don't understand your core strategy. Well, 90% of employees don't understand the key metrics you're talking about. Well, so imagine you're that CEO. What is it you want your employees to understand? What is it you would want your customers to understand? What about those shareholders, those investors who put their hard-earned dollars into your company expecting a great return, as well as the potential partners that you're focused on? Well, folks, that's what these calls are all about. Now, they're not required by law to provide these earnings calls. They are required to submit their financial performance. They're traded on the Toronto Stock Exchange. So they're required to communicate to the exchanges their financial information and performance. They're also required to get to their investors, their shareholders, that financial information. That being said, 99% plus of companies will also take the opportunity to share their message, to communicate to their customers, to their employees, to their partners, to their shareholders, what's going on. Now, in these calls, you're going to have analysts who are tracking the stock going to engage in that discussion. So that's what we're going to do. We're going to show or use these tools by looking at Nutrien's Q4 2024 results presentation. That's what we're going to use. So every month, we'll do a different company. This month, we're doing Nutrien. Now, here's my promise to you. I think Steven started, he introduced me and said, I've been here over 10 years. It's actually my 15th year here at Acumen Learning. As I look at the greatest opportunity to build your credibility, build your career, and build your company is to be able to do this. As you think about typical leadership development, there's 3 areas of focus. The first area is leading yourself. We've all taken those assessments like Gallup Strength Finder assessment, or maybe a Myers-Briggs or a DISC. Understand, who am I as a leader? The second portion is leading others. This is where we talk about coaching, feedback, performance management, communication, all these great leadership principles to help lead a team towards a given result. Well, the third portion of the 3 tiers is leading the company. Well, the first portion of my career, I spent a lot of time on leading self and leading others. The last 15 years, though, I've been focused on leading the company. And if I was going to give you my advice of 28 years of working in learning and development, one of the greatest things you can do is get more comfortable around both the strategic objectives of your business, the company you're selling in or a company you're investing in, as well as the key metrics and measures. Well, that's what this tool allows you to do. So my guarantee, if you're a graduate from our program, coming to our boot camps, going through the 1, 2, or 3 day program is awesome. That's a great foundation. But the greatest way you can build your credibility, build your career, and build your company is take the next 2 or 3 quarters using this tool to assess your company, a customer, a competitor, or just a company you're interested in. So that's what I'm going to walk you through. I'm going to give you our secret sauce on how to assess these earnings calls. So let's go ahead and jump in. There's 3-step process you've got to look through. Let me stop sharing this here. 3-step process you've got to look through as you look at assessing these earnings calls. The first is you got to prepare for it. You got to then analyze, and that's where the 2 tools and framework are going to come in. And probably the most important thing, folks, is right here. Man, if I inspire you enough to say, hey, this is kind of interesting, I'd be interested. If you don't actually do it and then apply it, once you've gone through that process, what am I going to do about it? That right there, that is the key. You want to build your credibility. You want to build your career. You want to build your company. You got to take this information and do something with it. So let me walk you through. Now, don't worry. You don't have to take a ton of notes at the end of this. I'm going to give you the tool. So just kind of engage, jump in the Q&A if I can be helpful. Let's start with the first phase. It's called the prepare phase. Just a high-level earnings call one-on-one. These earnings calls happen on a quarterly basis. They're typically a short one would be about 45 minutes. I've heard some real long ones, but typically they're somewhere from about 45 minutes to maybe an hour and a half tops, with probably 90% or more being right around about an hour. There's 2 typical parts to these earnings calls. The first part is the prepared remarks. This is where senior leaders of the company get on the call and they start having a discussion around their performance. So in this case, you got Ken Seats, president, CEO of the company, and Mark Thompson, their CFO, are going to talk through their prepared remarks. From there, they then shift. It's a Q&A experience. Now, the Q&A is not open for you and I as individual investors for most companies. There's just a few. In fact, Tesla's one where they actually take questions from an individual investor. Most of these questions are coming from large financial institutions. Now, of course, because it's in Canada, you're looking at RBC, you're looking at some of these big Canadian banks, but also some international banks, right? And they're analysts who are tracking Nutrien's financial performance. Their whole goal is to assess what's being communicated. They then write a report recommending to their investors either to buy, hold, or sell. There's actually 5 different options, but those are the kind of 3 common ones we think of. So that's what these calls are. Now, they're available to everybody. So let's talk about in the prepare phase what you have to do. The first thing you've got to do is you got to go locate the call. So let me kind of show you how to do that. And the way I'm going to do that, I'm going to jump over to this amazing website you're probably familiar with, and we're going to jump over to Google. So let's jump to Google right here. You should see that on your screen. And all you're going to do is jump into Google and start typing in what you want to look for. So the name of the company we're looking at today is Nutrien. Oops. And it's already guessing. So Q4 2024 results, earnings calls, there's all sorts of things you can look at. Let me just pull that one, see what happens. Well, the first thing you're going to do is just a little overview of what's happened on their stock price, but eventually you're going to get into Nutrien's communication. So right here, I click there. This is Nutrien's investor page. This is where the earnings call is available, okay? Now you can link to the replay. If you want to listen to it, you can go listen to it. Well, I click right here, and I'm going to go into my events and presentations. And as I click there, here's all the information. So here's the earnings call. They're already talking about the next earning call. So May 8th is when their next call is going to be. So if I want to prepare for that, I click there, and it's going to tell me when it is, and I can actually register for the call. Once the calls actually happen, though, I can go to these events page, and it'll give a little summary of what happened in the call. So here's the earnings call. You got other information available to you. Not only do you have the most recent one, which was Q4 right here, I can also go to the actual prior quarters, right? So prior quarters, if I want to look at maybe a year ago this time, and actually doesn't have Q3, but like Q1 of last year, I can jump down here and I have access to that information right below it. So here's Q1 of last year, here's Q2, Q3, Q4. When I click on that, so here's the webcast, if I want to listen to the webcast, but not only that, I've got a press release. This is a lot nice information, a little overview of what happened in their business, with some financial statements included as well. So when they first put out their call, they give this press release where you can find financial information. So here's their sales. You can see their sales information right here, etc. Well, not only that, they have their presentation. Now, I love the presentations because in just a few slides, they're going to give you what they want you to focus on. So, for example, here's their financial highlights page where they're talking a lot about profitability. So you get that information available to you. The last thing that I like to look for is a transcript. Now, once the call has happened, they actually created a word for word what each person said. Now, I like to grab the transcript because I just read through that to assess what's going on. Now, of course, if the call hasn't happened, then you basically go in, you register for the call, and none of this information would be available. So, for example, here, they've got their Q1 call. You click here, you can add to the calendar. You're ready to go. Then once the call happens, it's going to look very similar to what you see here on the Q4 information, where they'll have the recording available and earnings release, results presentation, as well as a transcript available for you. So folks, that's first thing you got to do is you got to access the information. You got to find that information. How do you do it? You go to that wonderful website called Google, and you're going to go ahead and just jump in and access that information. Well, once you've got access to it, the next step is to review prior quarter calls information. They may say, Brent, I've never done this before. Well, that's okay. Once you've done it once, you can go back to your notes and be able to assess the prior quarters. Or you can also jump back to that Q3 information and go ahead and pull down the press release. It'll have a nice overview of what they talked about in Q3 in anticipation of Q4. The last thing that I recommend in the prepare phase is to meet with your team. Now, why do I say that? One of the best ways to get better learning is to do this with somebody else. So if you're a leader, bring your team together and have this conversation. Listen to your call. If you're an individual contributor, get a colleague, come together. Let's listen to our call together and walk through the exercise together. You'll get a lot more out of it by doing it with somebody else. Well, folks, that's the prepare phase. You got to access the information. Go into Google, you then review any prior notes you have, and then you go ahead and listen to the call with a colleague, peer, or direct reports. Well, the next step is the analysis phase, and that's where the majority of your time is going to be, taking a framework and two tools and quickly assessing the company. So the framework we're going to start with is called the five driver business model. So let's open our chat box. Those that have been through our course, let's do a quick review for those who have never been through our course. In our programs, it's called Building Business Acumen, is one of our core programs. We also have a Mastering Business Acumen. We have decision-making, other courses as well. But we have a simple framework. It's 5 fundamental drivers, whether you're a $26 billion Nutrien or a small little street vendor business. These are the 5 drivers every company focuses on. So they're cash, profit, assets, growth, and people. Now, the value of any model is the simplicity of that model. So let's just go ahead and walk through in high level. As we talk about cash, we know that cash is vitally important. In fact, there's a common phrase, cash is blank. Put in the chat box. When you think about the importance of cash, cash is blank. What would you put in there? Yeah, Heather, king, queen, there you go. Some will say it's our, thank you, Brooke, it's oxygen for a company. Some will say stuff like the lifeblood, right? The lifeblood of the company. As you think about the importance of cash, cash is vitally important. That being said, you don't hear a lot about it unless a company's struggling with this. For example, Boeing's been in the news just yesterday. They were in the Wall Street Journal around their 737 MAX. That darn plane has been a challenge for them for many, many years. They are struggling with cash. Cash is vitally important. In fact, during 2020, they borrowed $42 billion to withstand the downturn during COVID. So cash is vitally important for business. You think about how do we impact cash? Well, obviously, if you can grow your revenue or reduce costs, that eventually will become cash once you collect it. But inventory impacts our cash. We talked about that in our class. We talk about receivables. As we increase receivables, we reduce our cash position. And then payables, what we call working capital. In the end, cash is vitally important. If you want to know what's going on in cash in a business, you're going to look at that cash flow statement. Well, let's jump to profitability. I love profitability. This is what I call Business 101. There's typically two fundamental levers that impact profitability. In fact, they also impact cash. You can increase one lever and it'll drive more profitability, or you can reduce another lever to impact profitability. For those that have been through our class, what are the two levers I have to grow my profitability in an organization? What are the levers we have available? Put in our chat box. Profitability, the types of metrics you're going to look at is your top line revenue or sales. You're going to look at profit metrics like gross profit, operating profit, net profit. If I want to grow my profitability, I got to first, I've got to increase my revenue, also known as my sales, right? I want to sell more of my products or services. The second one is reduce my costs. Those are two fundamental levers. In fact, I call them business 101, meaning this is fundamental. If you want to remember the most common levers that will impact all five of the assets, it's going to be those two. Yes, increase my sales, reduce my expenses, another way of saying that. Now, if you want to figure out what's going on, you're going to look at that income statement. Now, what I love about this is we're going to look at Nutrien. You're going to see the revenue drop. Now, revenue only grows two ways or decreases two ways. They can increase by selling more, what we call volume, so more products that they sell. The second is they can sell it at a higher price, okay? So what you're going to find is they actually saw an increase in volume, yet their revenue went down. What does that tell me? Well, if my volume goes up, I sell more of my products, but my revenue goes down, that means my pricing changed. And being in the commoditized industries, that fluctuation of pricing does have an impact on them. So income statement is where you go to find that out. Now, you talk about assets. We talk about what we call asset strength versus asset utilization. Asset strength is all about how much cash do you have? How leveraged are you as a business? I often will basically kind of boil it down to what does a company have? Cash, equipment, technologies to then be able to drive cash and profitability. And so asset strength is all about what do they have. Asset utilization is how do I take what I have and drive greater cash and profitability of the company. If you want to figure out what's going on from a cash asset perspective, you're going to look at that balance sheet. Now, then growth is what investors expect as a publicly traded company. A lot of time and attention is focused there. And then people are what makes it happen. When we talk people, we're talking both the external customer, those that buy or use our products or services, but also internally. How well do we execute as a team? How well do we drive results? Well, folks, with that simple introduction, I can now introduce two simple tools. One is a strategy tool. It's called the executive alignment. With this tool and any executive communication, you can quickly access the strategic objectives of the company. The second tool is called the navigating the financial. With this tool, you can assess the financial performance. So let me introduce the executive alignment tool. Here's how it works. What you do is when you're listening to these calls, you either pull out the tool that we're going to give you at the end of our program today, the workbook, or you just get a piece of paper and write down cash, profit, asset growth, and people. Now, folks, when I get the transcript, I just write it right on the transcript. In fact, I should have printed my whole transcript. I don't have it fully printed, but it's all marked up. I just wrote all over it. But what you're going to do is you're listening to this communication. You're looking, are they talking about cash? Are they talking about profit? Are they talking about assets? Are they talking about growth or people? Now, the way the tool works is you just start putting slash marks. Every time they talk about cash, profit, assets, you start putting slash marks, right? That's what you're going to do. Then you might say to me, Brent, wait a second. I've never been through your program. I kind of know what cash is. I mean, we all have a basic understanding of cash, but how should I think about it when I'm listening to these calls? Well, don't worry. We give you a quick definition of each of the drivers. So we define what the driver is. Then in addition to that, right below that, you have the types of terms you want to look for. So folks, you don't have to be an expert. You don't have to be a CFO. By the way, you do it 2 or 3 times, you'll be very comfortable doing this exercise. All you're doing is listening for some trigger words. Now, folks, all you engineers out there, all you finance people, this is not an exact science, meaning we're not all going to get the exact same amount of slash marks. But every year we do about 1,000 to 1,200 sessions, different companies, different industry, and invariably the top 2 or 3 drivers will go to the top. You and I may not have the exact same number of slash marks, but we'll typically have the top 2 or 3 drivers the same towards the top. So that's the first part of the exercise. Just listen to the call. Are they talking about cash, profit, asset growth, and people through filling out these slash marks? From there, you're going to answer 4 simple questions. The first question is, what business drivers seem to get the most attention? I love the second part of that. And why? What's the value of the why? The why is, well, who are they talking to? For example, when you hear these senior leaders at Nutrien talk, they're talking to investors. So you're absolutely going to hear stuff about growth. Why? That's what investors expect. Versus if they're talking to their internal team, you might hear a lot more about people. So that's a why. What's another why? Well, one of the big whys we're all familiar with today is tariffs. So they're talking about a fairly wide range of where they think their numbers will be. It all depends upon whether or not these tariffs are going to come in. So they have a very low end, meaning tariffs are impacting them, a high end where the tariffs don't impact them. So the why might be what's going on around them, the regulatory, the economic environment, the industry factors they might be dealing with. The second question is, what were the 2 or 3 main points the executive was trying to make? This is just simple summation. What are the 2 or 3 points? From there, what are the goals, trends, objectives going forward? So the first question 2 is all about what are the key messages. The next is, where do they see themselves going in the next quarter or 2 or year experience? And then finally, because you're listening to the earnings calls, I love the question on what were the key questions the analysts were talking about. Now, folks, you may have a leader in your company who'll say to you, you know what, just listen to the prepared remarks. I understand why they do that. Just from an interest of time. In fact, their prepared remarks were only about 15, 18 minutes is all. So you can easily listen to them real quick. Here's the value of listening to the analyst questions. This is where you put on kind of your senior leader hat, and you're seeing, well, how does the market respond to what we're communicating? The Q&A is where you get to feel that. I've listened to a call where literally an analyst will call them out. Now, you keep saying you're going to grow by X%. That being said, I can see in your financials that you're not investing any more in your assets. So tell me, how are you going to grow without investing more in your assets? Being that bold to kind of question what's really going on in the business. So it's a great way to assess, is the market buying what we're communicating, or where are they concerned? Helps you to predict how the earnings call might impact the stock evaluation, et cetera. So that's how the tool works, folks. Once you're done with that, the last thing I typically like to do, this post-call market reaction. Again, kind of reviewing what's communicated in the last part of it where the analysts are talking, but then start tracking the stock. What happens over the next day or 2 or week or 2? Now, folks, don't get too caught up. There's a lot of times weird stuff will happen. Right now here in the United States, a lot's going on. And so some announcement about a tariff coming on or taking off, that can swing things quite quickly. So it's not always just the call that's happened. You got to hear what's also going on in the market. But over time, you kind of see what analysts are saying. They'll often write little reports of what they think is going to happen with the stock, et cetera. And you can get more information from looking at that post-call market reaction. Excellent. Ellie's asking, where can you find that out? There's a few websites. One is called Seeking Alpha. The other is called Motley Fool. Those are 2 great ones. There's also, it's not as good as it used to be, but Yahoo Finance. You can hear Seeking Alpha is a great one where analysts will literally, any sort of communication, you'll see that, what they're saying. That's a great place to look, Ellie. Let me know if that answers your question. Uh, you bet. Okay, so let's jump into this. We don't have time. I only have about 30 minutes left, 25 minutes or so left. I don't have time to go through the whole thing, but what I'm going to do is open your chat box, and I've got two quotes. One is from their CEO, Ken, and the second is from Mark, their CFO. And here's what I want you to do. In the chat box, using my 5 drivers, let's just jot which of the 5 drivers are you seeing, okay? So here we go. Ken Seats, and here's what he says. Now, turning to a review of our 2024 financial results, Nutrien delivered adjusted EBITDA. What driver is he talking about there? Of $5.4 billion in 2024, as lower fertilized prices more than offset increased downstream retail earnings, higher upstream fertilization volumes, and lower costs. So what's happening here is the pricing's dropping faster than their overperformance by selling more, as well as their managing costs. That's why their revenue drops from $29 billion to $26 billion. He's explaining right there. Now, of course, what drivers there? For sure, profitability is going to be there. Now, eventually, it's going to impact their cash. Absolutely. One other driver I would look at, we often think of growth from the perspective of increasing. Well, this is also growth. It's just going down, right? Thank you, Raquel. Raquel, excuse me. Cash, profit, and growth, I think, are all great options there. Let's look at the next sentence here. Retail adjusted EBITDA, again, that's a profit metric. Earnings before interest, tax, depreciation, amortization. You might put in your notes, it's kind of our controllable profit. This was up 16%. So the retail outperformed. Yet we found that no, as a company, we didn't outperform. So retail had great performance, but overall, they didn't outweigh commodity price fluctuation. Up 16% from the prior year. The result exceeded our most recent full year guidance due to stronger than expected crop protection margins in North America, improved Brazilian retail performance, and the benefits from cost savings and asset sales in the fourth quarter. Excellent. Okay, so what drivers are you looking at there? So again, you're going to see profit there, right here, this profit here. What else do you notice? Yeah, we got some growth in there. A little bit about assets, specific Brazilian retail focused area, as well as North America. Margin also is a profit discussion. You're starting to see some themes here. North America crop nutrient margins, okay, margins a profit measure, increased due to a stabilization of fertilizer markets and continued growth of our proprietary crop nutritional and biostimulant products lines. Above my pay grade, all those technical terms. But what are they talking about? Well, they're talking about assets, yes. Biostimulant product lines, those are going to be assets that they're selling. And they're talking about how margins increased because of how fertilized markets stabilized, right? Well, this more than offset lower North American sales volume, which were impacted by lower corn acres, wet weather during the spring and fall application season. So, folks, you can kind of see, just scroll up and down in the chat box. What are you noticing? You're seeing a lot on profit. You're seeing some on a lot on growth, and then some on assets as well. Okay, that's how it works, right? Well, here's another one. I'm not going to read through it. You just scan through it and put in the chat box. What do you notice? This is from their CFO, Mark Thompson. What is he communicating? Put in the chat box. What do you notice he's talking about? I'll kind of underline some of the key ones. This is interesting. Low cost. Where would that fit in there? Phosphate sales volume guidance 2.3 to 2.5. Notice the big ranges. That's one of the questions the analysts talked about. You got these bigger ranges than they normally do, and it's really based on some of those tariffs and how that might impact their organization. You got some assets here. Excellent. So we got a lot of growth. I'm just scanning back up. Growth, definitely you see some growth there. Assets is in there. sales as well, which would drive profitability. Excellent, folks. Well, that's how this works. Now, in the end, if you had done it, you might have something looking like this. Now, don't worry if you did yours and it's not exactly the same as mine. No big deal. It's not about how many slash marks. It's the themes. Now, we saw what were the themes. You saw just in those two quotes. You saw profit. You saw growth. And we had some assets, some cash. These were the ones, if you read through it, I didn't have the quotes there, but these were the top two. Profit and growth were the top two. Then your cash was a third. Assets, and then just a little bit on their people is what you saw. Well, the next part is to then say, okay, let's read through what was communicated. Well, here's what I've done. I've gone through the call just from my perspective and tried to pull from it answers to these four questions. So let me just run through those real quick. First of all, which business drivers seem to get the most attention and why? You saw it through the chat box. Profit and growth were the top two, very close. I stuck with profit. It was just a little bit more there. And you can see in their very first slide, in their slide deck, look at what they're focused on. Every single one of these, those are profit metrics, folks. Our net earnings, net income, net profit, however you want to describe it, that is the bottom line profitability. EBITDA, earnings before interest, tax, depreciation, amortization. That is a profit measure. So all of these are profit measures that they were focused on. Now, how do I impact profit? Well, I have higher pricing or higher volumes. Writing with my mouse isn't working so good. Sorry there. Will impact my revenue or sales line. That's the top line. The second is reduction of, what do we call it? Our cost or our expenses. That's a big focus. So remember in the quote, he says, look, our revenue was down, our profitability was down, even though in some cases we got some good profit margins, but the pricing dropped so dramatically that they couldn't make up that by lowering their costs enough to make up the difference. So profit was a big focus of that, and that's what they described there. Nutrien leadership focused heavily on EBITDA performance, cost reduction, and margin improvements, particularly in the potash, nitrogen, and retail organizations. So here's some of the numbers. 5.4 billion adjusted EBITDA despite lower fertilized pricing. Cost-cutting efforts drove profitability, including SG&A. So they managed their costs. In fact, they had a $200 million cost reduction. They're hitting that earlier than they anticipated. That was supposed to be a goal that they'd hit in 2026. They're anticipating hitting that this year in 2025. Retail EBITDA was up 16% to 1.7. So one portion of their business, their retail, you saw some positive improvements there. And that's what they talked about here. Their goal, they have a goal by 2026 to be at 1.9 to 2.1. Holy cow, 2.1 billion in EBITDA from the retail section. That's the forecasted goal. And you can see what's happened over the last 3 years. They're anticipating about a 1.85, just below that 1.9 billion goal that they have. So other reasons profit was such a focus, efforts to optimize capital expenditures, increase automation. One of their automations, so potash, if you don't know, it kind of looks like Himalayan salt, is what one of my colleagues said. It is a salty substance, has high potassium. They use it as a product they put in the ground to help grow products, right? And they've automated that process. What that does is lower their risk of safety. So this is underground mining is what they do. It's kind of this scraper looking thing that kind of pulls that potash out of there. So one of the things they're doing is they're automating some of their processes on the mining side to lower costs. Boosting their profitability. Again, if I can lower my costs, even if my pricing remains the same, if I can lower my costs, I generate greater profit for the company. They talked around the tariffs and how that might impact their business, supply chain risk, pricing power, also understood keen attention to preserve profitability amidst market volatility. So what were the 2 or 3 main points the executive was trying to make? Well, one of the things is this operational and financial discipline, the idea of we know what we're doing, and as commodity price fluctuates, we're able to adapt to continue to drive efficiencies within the organization. So they talked a lot about cost efficiency, that second lever, how to reduce costs and manage costs through automation, and how they use their cash to drive sustainable profitability. So some of the things they talked about there is their 2026 goals. So how are they focused on driving results, advancing high return downstream retail growth opportunities, deliver upstream fertilized sales volume growth, take a disciplined and intentional approach to capital allocation. So where are they taking their cash and distributing it, and drive operational efficiencies and cost savings. That was that $200 million they expect to get in 2025. Market position and strategic growth was a second key message. We're a key player, the largest upstream player. They talk about that. The company highlighted higher fertilized sales volumes, record potash sales, and retail network expansion as key growth drivers. Now, you think about that. They've got these record higher sales volumes and record sales. So how did their revenue go down, folks? It's a pricing conversation. The pricing dropped, and that's what they saw that change happen. And then the last kind of key message, obviously, they're a Canadian company. Lots going on here in North America with a new president. We're not going to get political today. That's impacting them there. So a key message was, hey, we know how to navigate some of these challenges we're faced. So they address risks such as tariffs, global supply constraints, currency fluctuations, while positioning itself to capture demand opportunities in 2025. That's another reason their revenue drops. They report in US dollars, yet they get Canadian and international dollars impacting their numbers as well. So operational and financial discipline, market position and strategic growth, and how they navigated macroeconomic challenges. So what are their goals and trends and objectives going forward? I love these simple slides where it kind of summarizes. Here's the range of where they think their EBITDA is going to be on retail. Where their potash volumes will be, kind of those ranges they're given. And here's where they were in 2025. So here's their forecast, and here's where they were, in 2024. Now, what you got to be aware of is right here, playing a bit in the commoditized industries, fluctuation of different pricing can have a huge impact. So look at this. For every, $25 per ton change in potash selling price. So the price drops by $25 per ton. That has a $250 million impact to their EBITDA measure. For every $25 change in their ammonia selling price, it has a $35 million. So if it goes up $25 per ton, they'll see an increase of $35 million in their EBITDA. So this is fluctuation. If you ever deal with oil and gas, you deal with mining, they fit into that. The fluctuation of pricing has a significant impact on what they're doing as an organization. A big part of how they run, by the way, is right here on their natural gas pricing. So that's why that's included as well. So what are the goals, trends, and objectives going forward? Well, number one, they want to meet or exceed their 2025 targets, that 1.9 to 2.1 retail. So 2025 is a year to continue to build upon those goals. Looking at a 40 to 50% potash automation. I think at the end of this year, they're about 38% was where they were at on their automation, if I remember correctly. So well within striking distance by hitting that this next year. Well, what else did they talk about? Well, optimizing, let me get rid of my pen marks. Optimize capital deployment. So how do I take that $2 to $2.1 billion and invest it into our organization, high return, low risk growth investments. So where are they doing that? Some of that's some brownfield expansion within the organization. They're also looking at some small, what they call tuck-in acquisitions that complement their business. So they'll take that $2.4 billion and looking at different ways to spend that to expand their business and do it profitably. Continue to share repurchase and maintain a stable and growing dividend. They've been about $1 billion of money, cash going back to their investors over the last few years. They've been pretty stable at that. They've also increased their dividend. So the way they kind of maintain that cost to them is they bought back shares as well, which is value to shareholders. So you're getting more per share, but there's also less shares in the market, which improves the performance of that stock for that individual investor. And then maintain strong profitability despite volatile fertilizing pricing. So what were the analyst questions? Let me just hit a couple of those and we'll move on here. So key questions and concerns were raised by analysts. Number one was tariffs. The very first question right out of the gate is, tell us, how is this going to impact you? What is driving potash and nitrogen pricing trends? Why are they going up and down? How is Nutrien optimizing cost and efficiency? What was the strategy for capital allocation and growth? The big one I would say was right here. And then this cost one were the two that spent most of the time there. So folks, what do we know? We've done a review of that call. What do I know? Well, they actually had a good year performance-wise, although some of their numbers are down. The numbers are kind of outside of their control because of pricing. As you look at the tariffs, they have a plan for it. They know how to approach it. And at this point, they're ready to go, depending on what happens here in the United States. So very focused on that, but very strong performance across the organization. Looking forward to 2025, on target to hit their 2026 goals. So let's do a quick review of the financial metrics. What did we see there? Well, this is the tool called the Navigating the Financial. Now, don't worry if you haven't been through our program, you can quickly, easily pick this up. On the left-hand side, you'll see the 5 drivers: cash, profit, asset growth, and people. Right next to it, you have the key metrics. Every metric that are core to most companies are right here. Now, folks, you may have a specific metric. For example, Nutrien uses an EBITDA. What I've got here is just the standard metric. If I was going to do my calculations on Nutrien, it was my company, I would probably pull in the EBITDA rather than a net profit measure. But if you want it for any company, these are the most common metrics. That's why I've given you the standard tool. Now, don't worry. Even if you haven't been through an accounting class in a while, right here, it tells you where to go find those key metrics. Then you can do an analysis. Look at the current period of time versus a comparison period of time. That's how the tool works. So here's what I want to do. We're going to do 2 or 3 together. Then I'll give you the answers, and then we'll start wrapping up. We'll jump into the apply section of the tool. So here we go. We want to look at our cash and cash equivalent. So based upon my tool, in the chat box, let's just do this together. Which statement do I need to go to be able to find my cash and cash equivalent? What statement do I have to go to based upon my tool? See if you understand how to use the tool. Excellent. Raquel, thank you. Anybody else seeing the same thing? It's right here, right? It's the balance sheet. You can see it right here. It's telling you where to go. We got to go to the balance sheet. Well, you don't have it. I have it. So here it is. We're looking for cash and cash equivalents. When you see the cash and cash equivalent for 2024, how much cash and cash equivalent did Nutrien have on hand as of December 31st, 2024? Put it in my chat box. Let's fill this out together, folks. We'll just do the top 3 together, then we'll move on. Let's get comfortable looking at statements. How much cash did they have on hand as of December 31st, 2024? Excellent, Chris. Thank you. Satish, Raquel, thank you. Yes, right there. This number right here, right? 853 million is what they had on hand. Boom, I pull that over. I've got the number. Now, just by way of reminder for those in the class, what do you want your cash on hand to do? Do you want to go up? You want to go down? Or it kind of depends. Now, when you and I think about how much cash we have on hand, we want that to go up. But as a publicly traded company, it really depends upon strategy. If they're in rapid growth, you're going to see that cash decrease because they're investing in their assets. Once they got that new asset, new equipment, new acquisition in place, over time, you'll expect to see it go up. So Thomas is right. It depends. It depends upon strategy. In fact, if that keeps going up, eventually investors start to say, hey, what are you doing here? They don't want you just to hold on to cash. They want you to give it back to them through dividends or do stock buybacks. Okay, well, let's look at the next one. We want to get our cash from operations. Same routine. Tell me, what statement do I have to go to find my cash from operations based upon the tool? Help me out, folks. Excellent. Thomas, thank you. Raquel, thank you. We're going to jump over that cash flow statement. We're specifically looking for, the term is called cash provided by operating activities. That line right there. In fact, if you look at your company, this is probably one of the most important line items right there. How much cash did you generate from your core business? Give me the number. How much did they generate total cash in 2024? Now, folks, if you're new to this metric, what it is, it's the difference between all the cash that came from selling your products or services minus the cash that went out to drive or provide your products or services. This is now cash that's left over. I can use it to reinvest in our company, to pay down debt, to get cash back to investors, etc. And Thomas and Lynn are absolutely right. It's that 3535, that number that we were just looking at. It's right here. That's the number. Now, you notice that went down year over year. You typically don't like to see that. Now, what caused that? Well, again, we're not selling our products or services at the same pricing that we were in 2023. And so that's why you see that reduction there. Okay, well, we've got 2 down. Let's do the next one. We're going to jump into our total revenue, the line item. I think we all figured that out. We're going to go right here. It's our income statement. In fact, for the next 3 numbers, we're going all to the income statement. Yeah. So the subtractions in the cash flow statement, Satish, represent cash going out. So as this top section, you're actually reconciling net earnings to an actual cash dollar. What is my actual cash impact of that? So a negative on this number, if you come through our class, means cash going out. Positive means cash coming in. So that's why you see so few here. You're reconciling net income to actual cash dollars right here. Let me know if that answers your question. Well, let's jump back here. So we're going to the net. We're going here. We've got to get our sales number. So we come right here. Here's our sales number. Put in the chat box. How much sales did they have in 2024 at Nutrien? What's the number? Thank you, Thomas. Anybody else want to join us? 25,972. Thank you, Lynn. Now, again, that decrease, there's only 2 ways that decreases. It would be a decrease in volume or a decrease in price. What we actually find is volume was up, price was down significantly. And that's why you see that change happening. So I throw that over there. We come back to the income statement again. Let's get that net income number. Right here is the net earnings. Don't get confused with terms. Earnings, income, and profit are all the same thing. Put that 700 there. You do a calculation, 700 million divided by 25,972 gives you 2.7. What does that tell us? For every $100 we have in our company, we generate $2.70 of profitability. Now, what's the value of that? Is that good or bad? Well, you look at year over year comparison. So I did the rest of them here. And now what I'm going to do is give you the prior year comparisons. You'll notice a few things. First of all, you're going to notice our cash is down. Now, we know why that happened. It has to do with how much profit we generated year over year. We look at revenue was down year over year. So our profitability is going to go down as well. We're at 4.4 billion, 4.4%, goes down to 2.7. You can see everywhere our revenue's down, our net income is down, and our earnings per share are all down. Most of that impact was based upon pricing changes. That's why you saw that big fluctuation there. So what do I know? Well, I know it was a tough year. Now, there's a tough year based upon poor performance, poor decision-making. Most of that tough year is based upon commodity pricing, which is kind of outside their control. Still financially strong, still generate $3.5 billion that they can reinvest in their company. Still aligned with their goals and objectives they had for their 2026 forecast. So what do I know? Well, now that I know how they did, I can see their strategy. I can see their performance, a big emphasis on profitability, big emphasis on where they're using their cash to fund growth, big emphasis on driving their 2026 goals and objectives. You can see the numbers. How do I go and apply it? Well, the last section is all about application. And we here at Acumen Learning, this is the core of any learning. If you come to a class, if you come today and say, that's kind of interesting, you don't do anything with it, I've wasted your time. We've worked with 34 of the Fortune 50. And at one point, we had a company look at what does Acumen Learning do? How does business acumen drive results with an organization? Here's what they found. 84% of them found that it improved the performance of their business or function. 81% increased collaboration. 77% improved upward communication. 77% improved employee engagement. People were more engaged once they understood their business strategy and key metrics to measure. 75% increased business focus. 84% improved teamwork. Now, can you see how if you're able to do these by listening to your call, how that's going to build your credibility, it's going to build your career, and it's going to build your company. You can also see why those 3 emphasis of leading self, leading others, and leading a company. If you can get good at business and financial acumen, folks, this is the outcome of it. And that's how this tool can help you. So the apply is the most important. You got to take that and do something with it. To know and not to do is not to know. Maybe that was your mom. Actually, it was a Chinese proverb, I think. Well, here's the last part of it. Taking that information, summarizing, and say, what am I going to do about it? So for me, here's what I found. New insights. One of the big things was how big they are. About $25 to $40 billion. I did not realize the size of them when I was visiting Saskatoon many, many years ago. Profit is more than the bottom line. It is strategically engineered. So a real proactive approach on how they're driving profitability. If I can't control my pricing, what can I control? Well, I can control my volumes and I can control my cost. So that's a big focus as they strategically adapt based upon what's going on around them. Huge global reach creates strategic resilience, their ability to withstand ups and downs in different parts of the world. They use cash discipline to preserve flexibility and still invest where it mattered. Cash is king was a key kind of insight I gained. And the last thing, people strategy, competitive advantage, really focused a lot on their team members and how they help to overcome the ups and downs of their industry. So what would I do about it? Well, I've got two of these. The first one I did is if I was an employee, what would I do? Number one, I would drive cost discipline in my area of the business. That's a big lever for them right now. Number two, double down on customer relationship. How we can really anticipate customer needs, provide good customer experience, especially as we deal with some of these geopolitical issues of tariffs and how that might impact the customer relationship. Stay agile on market signals, tariffs, demand volatility, geopolitical shifts. Those are all things to be looking at. If me as a consultant, well, I want to look at that, look at their peers, how they're fitting within their peers, how they're impacting the greater market. I'd share that information with my consultants, my clients and customers. And boy, if you're with Nutrien, let us come help you. Help your employees understand. I guarantee as your employees understand what's going on in your business, they're going to help you make the strategic decisions that will help you to stay agile and anticipate market changes that happen within your organization. Well, folks, the last step of that is to take what you're going to do and sit down. If it's your own company, go have a conversation with your manager. Make sure your 2 or 3 action items, the things you're going to do, actually align with what your manager. Get that support you need. If it's a customer or partner, sit down with your sales group, or as you're talking to your customers, help them show how a partnership with Nutrien will drive their outcomes. If you're looking at a competitor benchmark company, sit down with your marketing team and help them think about how to differentiate your organization. Well, folks, that is the tool. We prepare, we've analyzed, and we've now talked about how to apply. So where do you go from here? Well, folks, what we've just shown you, once you've done it once, that's the second step in the prepare phase. Pull up these notes from the call you had in the prior quarter and listen what they say they're going to do. Now, when you listen to the call, you have that context to help you assess what they're communicating to you. Well, folks, with that in mind, let's get that information. Brooklyn already put in the chat box the tool. Make sure that's available. And so here's my question to you. With that tool that I've given you, have I inspired you enough to use it? And if so, who will you analyze? You can look at a company you work for, sell to, compete against, partner with, a company you want to invest in, or just a company you're interested in. Or next month, we have a chance to look at Rivian, the electric car company. Use this tool, come back and let's engage. Let's see what you found on Rivian's most recent performance. So Brooklyn has in the chat box, 1, you can access the workbook there. Second, we'll be looking at Rivian on April 30th. You can actually register for that experience. By the way, it was one of our customers who suggested we looked at Nutrien. So if you want recommendations, we look at them, we kind of crowdsource them, and then we make a decision who we're looking at. We're looking at Rivian next month, but maybe in the future we'll use one of yours. The last thing that I'd recommend, folks, if you really want to build your credibility, you want to build your company, and you want to build your organizations, come talk to us. There's a self-paced e-learning exercise you can go through. We'll give you $100 off when you do go to this website here. But if you have a team, you want to take your team, help them really understand your business, align their goals and objectives with your organization. Acumen Learning is the team to work with. We'd love to jump on a call with you. That being said, it's been my pleasure to spend some time with you. My team and I will stay on for a few more minutes if you have any additional questions. Otherwise, thank you very much for your time and have a great day.